Hey everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on your screen that'll be featured in this recording. And by the way, if there's a particular stock you're interested in, you go directly to it using the chapters feature in this recording. Before we get to the chart of the S&P, something that I saw in the metrics from YouTube that really surprised me is that they're showing that more than half of you that are watching aren't subscribed. Why not? It's free. Hit that subscribe button. We're going on a push to 50,000. Really appreciate it. Thanks for your help. All right, now let's go ahead and take a look at a chart of the S&P. So when we look here, we can see that on the movement today, we had a little bit of a move higher today, typical of some Fridays that we've had lately, but we're still underneath the 10-day moving average. And then when you look at the charts, I've got the ABC stuff turned off because I like to use the features for zigzags and flats, etc., drawing them using the tools rather than having them automated. So that's why you don't see a whole bunch of ABCs on here, but we are in a corrective phase. But if you do like to see the ABCs, a tip that I wanted to show you is if you get this software, and by the way, if you haven't gone to hubb.com and gotten a copy of the software, go do it. You get free Elliott Wave, you get free live Elliott Wave. So if you're an intraday trader, you can trade the patterns that we talk about in a live basis, but you can also do things like this. Like I have the data point set at 377. So on an end of the day chart, it's 377 days. But you can make it shorter. And if you're wondering why 377, well, it's in the Fibonacci summation series. Summation series is 1, 1, 2, 3, 5, 8, 13, 21, etc. Basically, you add the previous two numbers, it gives you the next, hence the name summation series. But if you change the count to 100, basically you're now telling the algorithm within this software from Hub, only look at what's happened on the shorter term, the last 100 days, the last 100 bars. And it does label a 5-wave pattern. And you can see that we had a wave 3 to the downside. A couple things to note here is that the wave 3 is green, which means that's still the active wave. In other words, the algorithm is not sure that this bounce was the wave 4 yet. It might be if we continue lower, but it's not convinced of that yet. So this is not a confirmed wave 3 being finished. But we could have a bounce here, and that be the end of the movement in the wave 4. And then we move down to the wave 5, which kind of brings us in that 540 level that I've been talking about for a while, just from these broad trading ranges. So I thought that was pretty cool. But going back to this week in the news, we had the Federal Reserve come out and hold rates steady. They kind of guided us towards 2 rate cuts this year rather than the 3 to 4 that some optimists have started to price in. I mentioned last week that I thought a June rate cut was too optimistic. I didn't think we are going to have that. I still don't. Maybe we get one in September. We'll see. But going back to look at the daily chart of the S&P, even on the high of the day, still closed below the 10-day moving average. We broke below 570. I actually thought we might go a little bit sideways here or have some sort of a small bounce because that was support going back from fall of last year, but we went right through it, kind of bounced in no man's land here between these two levels of support. So here's the bounce up, and if the shorter term Elliott wave count is right, maybe that 540 level is where we go on the wave 5. So I do still think that we're going to see 540 at some point in time. Now, could we bounce a little bit higher? The software says so. So the two things here on the positive side, I try to give you both arguments because we all are differing opinions, and that's what makes markets. Somebody that's bullish, there has to be somebody bearish. If there's a buyer, there's a seller. So on the positive side, we are having some separation here from the 10 and 50-day moving averages. That works the same as the rule you hear me talk about. No security in any time frame gets too far from the 10-day moving average. Well, the 10 and the 50-day don't separate too far either. So it's logical that we've hit resistance at 570 because that was going to be support. But could we bounce a little higher? We could, or maybe we just go sideways here for a while and allow the 10 and the 50 to come together. Again, same rule as that 10-day moving average rule. But then the next level support still is down here at 540. That 100-day chart that I showed you, the 100 data point chart, kind of pairs that off. All right, so one last reminder here on the S&P. Before we move on, I'm going to show you the chart of the TLT, but in this week's TradeFinder, that's exactly what I used for our case study consideration on TradeFinder this week, was that move down to 540. We went a little further out in time. We went 3 months. But if you haven't signed up for TradeFinder, you can do it with the link that's on your screen now. We do it every Tuesday at 1 p.m. Eastern time, so it's live during market hours. So we talk about the market, we look for trade ideas, and we have a live Q&A at the end, and we have a great community of people that view. So you can ask your questions, you can chat and converse with each other. Awesome time. So love to have you in next week's TradeFinder. All right, so let's go ahead and move on. Let's take a look. We're going to skip to the bond market, and then I'll come back and look at the other U.S. market updates. We've had some commentary twice this week from Jeffrey Gundlach. As you know, I kind of keep the market on mute, and that goes back to a joke I talked about when I was younger. I just could get so frustrated with the stuff that people would say. I threw a shoe at the TV and broke the TV. So my kids for Christmas that year gave me a foam brick. So I keep the TV on mute, but certain people, I'll turn it on. Jeffrey Gundlach's one of those because I do think he's a good expert in the bond market. And he's talking about how the bond market is going through this consolidation phase. This is TLT, the 20-year. So you've seen this chart. There hasn't been a whole lot of change other than we tried to break out of this second triangle. So we had a consolidating symmetrical triangle. We broke out, went into another consolidating triangle after following a really classic 5-wave pattern to the downside. So the bond market's trying to figure out where to go. So I like to listen to what Jeffrey has to say when he's talking about the bond market. He says that there's a little bit greater than a 50% chance that we're going to have a recession this year, but that's just kind of tossing the coin. And to get an official recession, if you're a consumer, you know that it feels like we're in one, but to get an officially rated one, you have to have 2 consecutive quarters of negative GDP. So that GDP report at the end of this month is going to be highly watched to see if it's still positive. But he thinks there's a slightly better than the 50% chance that happens. So there's not a whole lot of guidance here from the bond market. It's consolidating, and you could kind of say, well, okay, well, that's given the equities markets a bit of reprieve. I know a lot of you like the TNX. You mentioned that. I used to show this only, and then I switched to TLT because it's kind of a medium point on the yield curve. But the 10-year is the same thing, but TNX shows rates. So TLT shows prices and rates move inversely. So where TLT is showing prices going up and consolidating in the triangles, TNX is showing rates going down and consolidating. 2 symmetrical triangles here. So the bond market is pretty much in concert that we're not sure where we're going to go from here. And the Federal Reserve has said, and you know, I've picked on the Federal Reserve a lot in my lifetime, but they've said they want to wait and see. And I think April 2nd is the key. Are we going to get these tariffs? President Trump keeps saying April 2nd's the day. They're coming, and they want to see what the effect is going to be. You know, there's varying opinions on how much inflation is going to be imported through tariffs. So we'll see. And I just don't think there's any reason for them to go as quickly as June. But the bond market basically is quiet, not a whole lot going on. We're just going through consolidation. The one thing that I've mentioned in the past couple of weeks that we don't want to see is we don't want to see this wave 5 on the TNX. We do have the wave 4 right around that big fib level, 61.8. It's my favorite of all fib levels. I think it's the strongest one of all the different fib levels. But if we see rates start to move up like this with the economy weakening, whether or not we get the official definition of recession with 2 quarters of negative GDP or not, we have a slowing economy. And if rates were to take off like that, that puts the Fed really between a rock and a hard place. What do you do if you're a member of the Fed? Do you cut rates to help the economy? Well, you're going to spur inflation. And if rates are going up, that's because inflation is ticking up. And they don't want to pour gas on the fire there like happened back in the 70s. You keep hearing about the references to the 70s. If you're not familiar with that, that's what happened. The Fed started cutting rates too soon, and inflation came roaring back, and we got into stagflation. And then the Fed had to raise rates into that, which is very detrimental to the equities market, and it created a lot of problems. All right, let's go back to some of the rest of the U.S. markets here. We'll look at the DIA. And you're going to see very similar patterns here. Again, no 5-wave pattern. I gave you the tip there. You can do the same thing on the DIA if you want. Change the data points to a shorter time frame. But 420 here is the same level as 570 was on the SPY, and then 400 is the same as the 540 level. In other words, that's the next point of support on the DIA. Also, closing You can kind of say we closed on the 10-day moving average on the DIA, but we did close below that resistance level. So both of the markets, the primary markets, the S&P and the DIA, giving us pretty much the same information here that we're testing what has been support. You can see on the DIA how much that 420 level had been acting as support, pretty strong level of support. We're testing that. Is it going to hold as resistance, or can we make our way back above it? I don't think you can be really bullish on the equities market unless we break above those levels. I think that's going to be key. If we go to the Qs, little slight different pattern here when we're looking at the chart of the Qs. We are consolidating here. In fact, one of our subscribers talked about this triangle in our insiders meeting last night. That's for subscribers only at ewotrader.com. They have their own Q&A period, and they noticed this formation here. Not a large, but an actual ascending triangle being formed here on the Qs, and some separation there again between the 10 and the 50-day moving average. Maybe we get a little breakout here, but I would argue that if we break to the upside on the Qs, and you would think that with the bond market being quiet, maybe that could help add a bid under the Qs, and then we'll look at the IWM in a minute back up here. But a break to the upside only takes us back to the resistance level, and so that level is at 500 on the Qs. So the Qs are a little bit below. We're testing resistance, what was old support on the SPY and the DIA, but we're below that on the Qs. Maybe we get a move back to the upside. It's hard to imagine the bond market cooperating more than it is now unless rates just take off to the downside. I don't see that scenario, especially with the Fed guiding us to 2 rate cuts rather than the 3 or 4 that people had hoped. So let's look at the IWM. The small caps are very interest rate sensitive, so that plays in a lot, and they still managed to move to the downside even as rates were consolidating. So we had a little bit of a bounce off this. You've seen this chart. Beautiful zigzag pattern here in the wave 3, my favorite of all directional patterns. I love trading zigzags within a wave 3, and some of you are like, how do you call this a directional or impulse pattern? Zigzag is a corrective pattern. Well, in the world of Elliott wave, corrective patterns are flats, zigzags, and triangles. And the reason they're labeled as corrective patterns is they usually show up when a wave 5 ends. But there's no doubt that a zigzag is directional in nature. And where a lot of Elliott wave education will tell you stay away from the wave 3 because you don't really know where the wave 3 is going to end, pretty much everybody agrees is the strongest of all waves. So I'm like, well, if we can get an idea of where the wave 3 is going to go, why not trade the strongest of the waves? And that's where the zigzag comes in. So we had a 50% correction. You go to 100% extension, and we've gone sideways here. We tried to bounce a little bit and then back down. So that doesn't bode well for a continued bounce. And note that the algorithm still has the wave 3 active, meaning that we could move lower. And if we move lower, the question becomes, do we move all the way down to the 161.8, which is the next fib level? We could find support anywhere like we did on the SPY, but that has to be at least taken into account. And gosh, if we see the TNX move up, I think that is a really good cue that likelihood the IWM moves down there. We'll have to wait and see. Quick review of the VIX. We've come back down just a bit. And we've talked about this lately because it's a bit unusual. Some of you commented on the last recording that, yeah, this has been unusual on the VIX. Usually when we get spikes up around 30, it's because we get these big spikes like this, and then we immediately correct down in volatility, meaning that the market bounces back. But to see the VIX kind of trend higher with these large bars, meaning lots of volatility intraday, the markets are moving intraday, and then go up, and we kind of tested 30 twice there, and we're back down underneath that 22.5 level. But look where we are. We're sitting right on the 50-day moving average of the VIX, and it's also right at the 61.8% level. So is the VIX going to start trending higher again? If it is, then likely the markets are going to start trending lower. I think some of this volatility may be over, but I also have the question in the back of my mind just from years of experience, can we end this downward move in the markets without a big wild spike in the VIX? One of those washout moves where you get a big spike in the VIX, the market has a big down day, everyone that wants to sell is sold, then you start to set up for a sustainable bounce. So we don't really know. This is new. One of the great things about trading is, and I've been doing it for nearly 28 years, you always see things you've never seen before, and this is quite unusual as far as the movement of the VIX. So, that's what keeps you engaged day after day after day. Let's go ahead and look at energy. We'll look at UNG. Talk about this, not much else to say. You can watch some of the past recordings. We had a bid under natural gas because all of these data centers like the one that Elon built are going to be running on natural gas. But then after that initial bid, the questions come in. How many data centers are going to be built? How long is it going to take to build them? How much natural gas are they going to use? So there's some questions out there as far as a sustainable bounce, but we are labeling a wave 4. Even though it's under 30%, it passed that 23.6% fib level. So the algorithm labeled it. And if you read the works of Elliott, he would label that in his algorithm because he was such a believer in the fib levels, but he wasn't a big fan of the corrective level unless we move past 30%. That's where he wanted to see it go. But we have the 50-day moving average looming a little bit lower. Notice that we broke the 30-day today. I only have the 30-day on there because of crossovers between the 10 and 30. I was taught that by ex-market makers years and years ago. The 50-day moving average is widely regarded as the trending moving average, but you can get kind of an early view of it when you get crossovers between the 10 and the 30. So you can see the crossover was back here in December, and then that 10-day moving average has stayed higher. So we've had this trend higher, even though we've had corrective moves. So we'll have to wait and see if this gives us a renewed bid. But there's so many questions now on how much natural gas is going to be used that we're kind of going sideways and consolidating. We'll take a look next week. Maybe we'll have a little more information there. But let's go to oil. Kind of doing exactly what we've talked about so often. We did have this small triangle here, and Elliott himself would say, don't diss the small triangles. We tend to focus on these big ones like this here, where we had this big triangle. We broke to the upside. You all know this. You've heard me enough times. It got a little higher than I thought, but it kind of coincided with where we were with the mouth of the triangle. That's how you give the expectation of the breakout move. We came back down. We tested the point of the breakout action. When you get a symmetrical triangle or any of the triangles, once they break out, you tend to come back and test the point of it. It's the same thing with gaps, so you don't know when. It could be soon, could be later, but you eventually make it back down to the point of that triangle breakout. What's odd about oil, or interesting, is that not only do we come back to the point, but we consolidated again right here with this small triangle. We've had a little bit of a breakout, but that's only going to take us back up to about the 50-day moving average. And I've gone through all the analysis on the drill baby drill, trying to create more domestic production in the U.S., but OPEC saying that go ahead, do that. The more production you make, the more we're going to cut. The OPEC wants to keep the price at an elevated level, but not to the point where it gets too high that it hurts demand. So they're trying to manage the price of oil, and I think this trading range in the 65 to 80 range wouldn't surprise me to see a test of 80 or a test down to 65, but I would be surprised if we break one of those levels. I think that's where we're going to be, and that's held pretty true for the last several weeks, ever since we started talking about that. Now let's move into cryptos. Take a look at Bitcoin. And you can see that we have, this is the interesting news on Bitcoin, a pretty decent symmetrical triangle here. It's not perfect because there's a little gap there, but when you have multiple touches on lower highs and higher lows, I like that triangle formation. And as a review, any triangle, we had actually our AI Fusion class this week. And by the way, we're going to do a review of that on Monday night. So if you missed the AI Fusion class on Monday or last week on Thursday night, we're going to do it on Monday night. Again, we're going to do a review of that. You can look at the recording. So sign up that and you can have access to the recording. I'm going to highlight a few points Monday night and open it up to a live Q&A. So if you missed it, you got another opportunity. You can see the link on your screen. So go register. You'll have immediate access to the recording that we did. And then you can join us again Monday night if you have some questions to go through. But one of the things that I talked about here was this, when you have less than a perfect triangle formation, but a question was asked on the breakouts. And I've talked about this so many times. An ascending triangle does not mean an upside breakout any more than a descending triangle means a downside breakout. Ascending, symmetrical, or descending triangles all can break out either direction. And with this little bit of gap here, it's not the most well-formed triangle, but it's pretty decent. And the key here is about $20,000 wide here on Bitcoin. So you look at the point of the triangle, which means you could break $20,000 higher or $20,000 lower. So it's going to be really interesting to see. But I don't think Bitcoin stays in this consolidation much longer. I think we're going to see the breakout, and it's going to happen very soon. They were talking about Ethereum on the financial networks this morning. We're trying to figure out, why can't this get out of its own shadow? It's just not participating with the other cryptos. Maybe it was the kiss of death having all those Ethereum ETFs that came out, but we're going through a nice sideways consolidation. Maybe we can get a little bit of a move higher, but we've been stair-stepping down, and that's what you have to be careful with, because we move down, we go sideways, we move down. That's the stair step. You can stair step up or down. So this is another one of the consolidations. Is the next directional move going to be down, or are we going to finally hold here and start a move to the upside? The algorithm is not sure we're done going down, so we have to at least keep that in mind, that we could get another move lower on Ethereum, and if we do, I think we see 1,500. But for those of you that are long Ethereum, let's hope that this is the bottom of the steps, if you will, the stairs, and then we start to move back to the upside. XRP, which has been the outlier, performing much better than pretty much anything else in crypto land. It had the big run post-election like all cryptos did, but it's gone through a really nice sideways consolidation here. And you can make an argument that you've got a pretty decent triangle being formed here on XRP, just like you have on Bitcoin. So we could see a breakout move in XRP. It's not quite the same size, but it's not small either, from $2 to $3. So it's going to be $1 move on XRP that's likely coming in the not too distant future. Will it be in the same direction as Bitcoin? Probably, but we'll have to wait and see. It isn't a qualified 5-wave to the downside pattern, but as I've highlighted numerous times over the months, when you see a triangle, going back to what Elliott himself said, triangles trump everything. When you have a triangle, you can break either direction. Don't get caught in picking a direction because of the Elliott wave labeled pattern. In other words, don't say we're breaking to the downside because we have a 5-wave to the downside pattern. We could just as easily break higher. That's where it gets a little bit confusing after those triangles. And then Solana, we'll take a look at that. And it's kind of acting like Ethereum, not really participating too much. It did have its post-election bump and then came back. And then we had another run higher here, but then it's just kind of fallen off. And the only big update was when it was included in that basket of cryptos that are going to be in the strategic reserve, but it was immediately sold back into the very next day. It's trying really hard to hold this level. It's not the end of the world if Solana breaks this level, because there's another level of support not too far below it. So in this channel here, if we break below that, then we could be looking at, and you all know what it is, Katie bar the door. That would really be a negative for Solana if that happens. But it's got a pretty good corridor of potential support there. And then the one that really surprised everybody was Cardano, that it was included in the basket. Not many people thought that. So it had the biggest bounce 2 Sundays ago when that was announced. 60% move in one day, which was then immediately sold into like the others. And again, forming a triangle here, once again, not the best constructed triangle. Is a pretty nice set of higher lows, but we have a lot of empty space here as far as the lower high part of the triangle. So maybe we don't get quite the normal breakout of the triangle here, but notice that we are consolidating right at 75 cents. So we're going to get likely some sort of a new movement out of Cardano, but it probably ain't going to be very significant. You take these 2 bars out from those outliers from 2 Sundays ago, and other than that, it's a much smaller move. So maybe 20 cents or so movement are on Cardano. Let's go to the metals. We'll take a look at gold. We take a look at GLD. Finally taking a slight breather here. We had this big run up. Kind of surprised me. Not that GLD does this. GLD is a great one if you like to trade those triangles. We do the unique strangles at ewotrader.com. My claim to fame is picking the best delta gamma relationship for breakouts on strangles. But we had this consolidating triangle here, nice symmetrical triangle, big breakout. We consolidated again, broke out again to the upside. and maybe we're finally running out of steam a little bit here on GLD. All we did was move back. You can see we touched the 10-day moving average on the low. The algorithm isn't sure that we're done to the upside, even with as big a move as this has been. So we'll have to wait and see if we're going to go to a little bit more of a correction here. At some point, we'll create that wave 4 correction. Maybe it comes next week, or maybe not. Maybe we need to go just a little bit higher yet. But pretty amazing run in GLD that we just had been talking about for some time that really wasn't doing anything. It finally took off. And then we look at SLV, which has not kept up the pace with GLD. Seems like at some point it's going to play catch up. We do have a wave 5 labeled here. We got into the lower half of the tap box, stands for time and price projection. Those are set by Fibonacci ratios. You can change them in the software. Like I showed you how to change the data points on Elliott Wave. You can change this tap box from the Fibonacci levels, which I prefer, to statistical probability if you prefer that. So you have some things that you can do within the algorithm based on your own personal preferences. But we're below the 10-day moving average here on SLV, where we touched it on the low in GLD, and perhaps we're coming back to test the point of this breakout. So we had this triangle breakout, just talked about that. Usually you come back to test it. This high held from back in October. We knew that was going to be resistance, and we have to wait and see, could we break it? So far, no. Resistance is held. We're so close to the point of the triangle. Feels like we need to come down there first, and then we'll see if that's just testing the point of the breakout before a renewed wave 5 higher, or if that's the end of it and we're heading back down to the previous 4. Because again, based on Elliott Wave rules, if the wave 5 extends less than 100%, you go back to the previous 4. We had a 76% extension on the wave 5. So if we don't hold the point here on the triangle and SLV, I think we're going lower there. So pretty interesting stuff. Now, as we move over into stocks of interest, we're going to take a look at Tesla. And by the way, just as a reminder, as we look at the stocks of interest each and every month this year, just like last year, we're going to be giving away a free level 3 subscription. I do want to remind you, as I pointed out in the beginning, I probably haven't pointed this out enough when it's talking about how more than half of you aren't subscribed to the channel, which it doesn't cost you a thing to do it, and you get notified immediately when the recordings are posted. You need to be a subscriber to win on the giveaway. But each and every month, we're going to give away one of our free level 3 subscriptions, and that counts our time strategy, which is sideways based. So we take advantage of volatility spikes on stocks that have dropped, but it's income. And then volatility strategy, which is where we're looking for those triangle breakouts. And then we have our AI-based impulse strategy, which is primarily those zigzag patterns within the wave 3 that I've talked about, my favorite of all directional patterns. All 3 of those portfolios combined is what we call level 3. It covers pretty much all market conditions. It's worth thousands of dollars, and we're giving away one free each and every month if you leave a comment. You can leave any comment underneath the video, and that puts you in the registration if you've hit that subscribe button. One of the things people have had fun with, we had a lot of new people viewing the channel last week, and you made Chuck Norris references. I've heard that a lot. You look like Chuck Norris, whatever. So put in your favorite Chuck Norris one-liner if you want, and leave that as a comment. People get a kick out of those. It's fun. I enjoy reading them, and I appreciate the references. So looking at Tesla here, this is pretty interesting. We're in this tight channel here between 200 and 250 on Tesla. And I don't think you want to go long unless you break above 250. Note there is some separation here, just like in the market, between the 10 and 50-day moving averages. So that would suggest maybe we're going to go higher. We tried to break to the upside today, but you know, another one of our rules is today doesn't matter. You need a second day, a follow-through, or confirmation day. If we get that and can break above 250, maybe we get a renewed bid in Tesla, and then I think you can feel more comfortable going long. But I think right in this corridor, you just kind of have to sit on your hands and wait. It's the Missouri thing. Show me, break above this 250 level, and then we can come back in and look for a renewed bid back to the upside in Tesla. Or if this is a false breakout and we move lower, it's kind of bring us down, because it's a small triangle here, down to this 200 support level. And if you're long Tesla, I think you're okay as long as it stays above 200. I don't think you should be too concerned about that. Of course, you had a nice run here where it doubled in price in about a month, but you still are okay as long as we stay above 200. But a break below 200 and we could get back into the Katie bar the door scenario again. You want to see Tesla hold 200, but right in here is just kind of no man's land, but it's a very strong corridor of support. If I condense the chart in, you can see how long we stayed in this range. And if we break that, then we're probably coming down into early last summer, which is down around 170. Maybe that's not quite Katie bar the door, but it wouldn't feel good for people that hold Tesla. And then Palantir, PLTR, I'm going to go ahead and change it since they changed exchanges. So we get to the exchange that gives us the most recent data. And take a look here. And this one's interesting. Palantir, maybe you could take a nibble here. If you're just itching to do something to go to the long side, even with what I showed you on the 100-day chart of the SPY, it's holding in there really well. We had this level that was resistance, is now support. We've gone sideways and consolidating there. We're trying to hold it and break higher, but we can't get above that 30-day moving average, which is not a primary moving average for me as far as support resistance. Again, it's in there because of the 1030 crosses. 50-day is more important. But again, we're trading right there. All three of the major moving averages that I watched, 10, 30, and 50, have all converged here. But it's trying. If you take a look at just basic technical analysis here on the set of higher lows here, and we have the wave 4 right at 50%. If you're looking, if you have speculative money and you're just itching to find something maybe to go along with, and no tech has been, really problematic, maybe we start to sneak a little bit higher back up here. And if we can break above this area here, right where we are, right around 88, if we can get up to 90 or so, then maybe we can get a renewed bid in Palantir. But if you're looking for something really speculative to the long side, Palantir may be a place to look. NVIDIA, which, gosh, they had their big conference this week, and it was well received. They can't be more bullish in their commentary from the company, but nobody seems to care right now. We're in this big trading range between 100 and 140. And interesting here, talking about our time strategy is based on AI signals on stocks that drop. And so we had this big drop in NVIDIA, and it gives you these boundaries. It's a 1 standard deviation range, and it gives you a score on the likelihood of staying between here. We become interested when that score is 75 or above, which is a feature of the software that you can subscribe to if you're interested. But it's a little below 75, and yet look how well it's working. We're staying in that boundary range. At some point, we'll break out of this range, but we had the symmetrical triangle. We broke to the downside. Look, that lower boundary held that the AI told us, and basically that's just 1 standard deviation from the breakout. So at some point in time, NVIDIA is going to get its act together and it's going to move again. The problem that is concerning here, if you're a big NVIDIA fan, is you probably have seen this already if you've been watching and drew it yourself. But we have a zigzag pattern that's qualified. Remember, in the world of Elliott, there's a difference between being qualified and confirmed. But we do have a qualified zigzag that could bring us down at least to 100 on the C wave extension, and maybe all the way down to 100% extension, which would bring us down to 85. It's kind of hard to imagine. NVIDIA was so loved for so long, but it's a possibility that at least needs to be in the back of your mind. So be careful on that. If you're trying to find a spot to go long NVIDIA, I think you need to wait. Let's at least disqualify this downward zigzag and get above the 50-day moving average. Even if we don't break above this upper boundary, it would be more prudent, I think. I like to give both aggressive and conservative views. We all have our own risk tolerances. You know what your own is. If you're really aggressive, if we can get above the 50-day moving average, then perhaps you could take a shot at going long then. If you're more conservative, you're like, I want to see it get back above 140 here. I want to see it back above the point of this triangle before I go long NVIDIA again. And the fact that we do have a qualified downward zigzag is something we have to keep in the back of our minds. You guys requested I read all of your comments. I answer as many as I can, time and price permitted, but I read them all. You ask, could you show SMH? So here we go, the semiconductors. And note that we've got a zigzag here as well on the semiconductors. Also, no 5-wave pattern. If we take a look here and move up, we're right around 43%. So just slightly above that 38.2% level, which would give you about a 61.8% C wave extension. So down around 200 on the semis. So kind of not giving you semis, I should say, not giving you too much hope on the whole tech sector thing. We'll see how that plays out. Just real quickly, I thought I would do the exact same thing here since y'all asked about it. Let's show this, the 100 data points on the SMH, and you can see it also labels a three wave to the downside. Haven't labeled the wave 4 yet, but it's in that zigzag pattern. So, gosh, it looks like maybe we continue lower on the SMH, and then maybe that 4 becomes labeled. So isn't it interesting that the SMH and the SPY look very similar when you ask the Elliott wave algorithm to look at just 100 bars of data rather than the 377 that I like to keep it on, again, because it's in that Fibonacci summation series. And last but not least, we'll take a look at Apple. We do, by the way, and referring to TradeFinder, look at all the international, not all, but we look at a lot of international markets during TradeFinder. So if you're looking for some international markets, join us on Tuesdays for that. But with Apple, we had this nice triangle set up here, nice symmetrical triangle, big vertical break to the downside. We hit the 10-day moving average on the high. We do have a corridor of a couple layers of potential support here. If we can't hold 210, we still have more support down at 200. But to go long Apple, that point there at 220 is a major point of resistance now. So, aggressive or conservative, it doesn't matter. We got to get back above 220 before you can start to be bullish Apple. The best thing you have going for you here is that there is a little bit of separation here between the 10 and the 50-day moving average, which I've noted a couple times earlier in this recording. So if we can maybe bounce up a little bit and close that gap, that's the most bullish scenario. But 220 is going to act as resistance. Until we break that, I don't think you can go long Apple. And if we don't hold 210, then you're probably going to see 200. There were some people on the financial networks calling for that today. We'll see if they're right in the long term, but that's the charts. Thanks as always for watching. Hope you have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.